When the G7 confiscated, or shall we say stole, the $300 billion Russian assets, they hailed it as a great victory, with headlines celebrating this brilliant decision. You might think taking your enemy's money and using it against them sounds smart, but it's actually very short-sighted. This latest revelation reminds us that the world is watching, and it's not just China that's outraged. Even Saudi Arabia, a Middle Eastern giant and OPEC leader, isn't too happy about it either. Hello everyone, welcome to Earth Economy Explained. I'm thrilled to have you here today because I have some shocking news that could reshape your understanding of global economics and politics. Hold on to your seats because what I'm about to share will leave you questioning everything you thought you knew about international relations and financial stability. Let's dive in. Another shocking news unfolded recently, and this came from the Saudis. According to reports, Saudi Arabia issued a warning to the G7, particularly the EU, stating that if they seized Russian assets, the kingdom would sell off G7 bonds. This is a major development that signals the increasing multipolarity of global power, no longer centered solely on Washington. Saudi Arabia's finance ministry privately communicated their opposition to the idea of seizing sovereign assets, suggesting they might sell Western debt holdings, starting with the French Treasury. Remember, several weeks ago, G7 leaders decided to give loans directly to Ukraine, which would be repaid using profits generated by Russia's sovereign assets. Imagine your bank taking the interest your savings earn, calling it theirs, and handing it over to your adversary. That's essentially the plan, and Saudi Arabia's warning just proved how reckless it is. The kingdom holds massive amounts of European bonds, and selling them would send a strong message to the world. Saudi Arabia isn't alone in this sentiment. Countries like China won't buy dollar or euro assets anymore, and now the Saudis are losing trust in Western bonds as well. The Saudis specifically mentioned debt issued by the French Treasury, and this is bad news on many levels. Firstly, the West and the East are decoupling. Europe and the US are trying to restore their industries back home, which will cost a lot of money. Just in semiconductors alone, the West has to spend an incredible amount to counter China. China today is leading with over $140 billion in investments, while America allocates $33 billion, and the EU is expected to spend $46 billion. These amounts will only grow over time. Where will they get the money? They need to borrow it from investors around the world. Raising debt is crucial for the West to build up their industries and challenge China. Confiscating Russian assets was a crazy idea, and Saudi Arabia's warning just proved it. The world is afraid of lending money to the West because asset seizure is now a real risk. If fewer countries invest in Western bonds, it will drive yields up and make borrowing even more expensive, causing them to lose the economic war against China. Saudi Arabia has been selling off U.S. treasuries over the last 4 years, hitting a low of $108 billion last year. The U.S. Treasury market is $27 trillion strong, so dumping an additional $100 billion might cause yields to spike for a while, but won't collapse the entire system. The real damage is the symbolism and the signal it sends to the world. The world's biggest oil producer is no longer rolling their investments into U.S. debt. They are spreading their investments around the world, especially in BRICS countries. The real risk Saudi Arabia poses to the dollar and U.S. bonds is how they price their oil. The dollar today accounts for the majority of global trade and export invoicing. Russia is a big oil exporter, and China is the world's biggest manufacturer. By accepting local currencies in trade, they help reduce the world's reliance on dollars. If you need fewer dollars to transact, naturally, you hold fewer U.S. treasuries and euro bonds as well. Let's not forget about the expansion of BRICS. Countries like Thailand, Malaysia, and Turkey are all seeking membership. There's a clear reason why Putin went all the way to Vietnam and Kazakhstan to create a bigger network of nations happy to bypass the reserve currency. Commodity trade is the easiest avenue to begin de-dollarization, and BRICS nations control a lot of oil outside the West that can be sold outside of dollars and euros. The whole intention is to get countries, including Saudi Arabia, to price their commodity exports in non-dollar currencies. The recent actions and reactions of major world players like Saudi Arabia are reshaping the financial landscape. Will the West recover from the repercussions of seizing Russian assets? Can the East solidify its growing economic power Thank you for watching my take on this exciting news. We're navigating through unprecedented times in global economics and politics. Stay tuned as we unravel these complex issues. Remember to like, subscribe, and share this video if you found it insightful. As always, stay safe and be updated of recent updates surrounding the world economy. Thank you for watching Earth Economy Explained.